Hi everybody, Eric Templeton with Amerititle here to talk about what's happening in the Willamette Valley real estate market for last week ended June 6th, 2020. I'm comparing that with the same week in 2019. So our listings have rebounded. So 233, that's the biggest weekly number we've had since the COVID situation started. We're just 5% off of a year ago in the same week. And for the last 4 weeks, we've averaged 201 listings. So the 233 is definitely better than where we've been. So the last 4 weeks, we're almost 20% off of last year, but it is rebounding. So that's good news. The bigger news, as we've been talking about for the last several weeks, is that what's going under contract continues to spike. So 244 for the week, and we've averaged 211. And so this time period, it's very unusual for us to have homes going under contract at a faster clip, and we have new listings to replace them. So 211 for the last 4 weeks. It's 20% ahead of where we were a year ago. We'll look at that in a graph here in a second. Sold units, so these are closed sales. They continue to be down, but they will rebound. So what we have going under contract, we have a bunch sitting pending, so those are about to pop. So the 130 is pretty low, 20% off of last year. We're 22% off for the 4-week average at 133, but that will be increasing in the weeks to come. Terminations are still up from last year, but staying pretty consistent, right around 50 per week. And our current inventory, we've been in the 2000s. I think this is the first week we've been at 2109. So we did add some inventory because, again, it doesn't fall off the inventory until it's sold. So they're not necessarily available to put under contract because they have a lot already under contract. But the current inventory that includes pendings and under contract is at 2,100, and sellers are still reducing prices. I would argue that they don't need to be, but they are. So we're about 50% ahead of last year in the same week, and 83 is about 43% for the 4-week average. So that's the summary, and I will skip through all of these. Hopefully you're getting this report, and you can take a look at these. We've talked about these in weeks past. So you can look at the old videos if you want some explanations. I will stop here to show you that 2109 in inventory. It used to be, this first few weeks that we were doing this, if you added up what was under contract and what's pending, it was about what was active. And I'm including bumpables in the active. But now we have 854 in active, and if you add these up, we have 1.5 times what's actually active and available under contract already. So this 443 pending, I think that's the biggest number that we've had. If you look at it on the graph, our inventory has been pretty consistent. And as soon as the purples, the pendings become sales, they turn black. So really this very last week here is is where we sit currently. Everything else just tells you the status that listing now is. It's either sold or expired or terminated. So what's active, this blue, this is about as small as we've seen, 854 of what's really out there available. So our months of inventory is hanging in right here, but as soon as the purple becomes black and they fall off the inventory, you're gonna see inventory drop and absorption spike. And then going down to our line graph that puts everything on one picture. The gray box is the COVID period. So this is the same period in the last 2 years. So you can see what's typical and what's happening now. We've talked about this before where you had listings once this happened, and these are 4-week averages. So you had to get through those 4 weeks, and then you see potential home sellers stopped listing. That's rebounded, and we're back. Like I said, this is the 4-week average. So if you look at this last week, we're only 5% off, but we're about 20% off of where we typically would be at this period of time. So generally speaking, edge of this gray box, we're up around 250 listings, new listings every week, and we're down closer to 200 now. And this gray line, same basic trajectory. As soon as we had the restrictions from COVID, we quit putting things under contract, stopped listing, quit putting them under contract up to a point, and then that spiked. And we've never seen a 4-week period in this 2-year period, 2.5 years, this high. So well over 200. I think we're at 211 for the 4-week average. That's a really high number, and it's more than we're listing. So again, inventory problem. And what's interesting, and I hadn't looked at this before, but if you look at the new contracts, the gray line compared to listings, we were having a hard time getting enough listings to keep up with the demand prior to all this. So if you look at the years past, it usually starts out where they're about the same. We'll start out in that 100 to 125 range where we're listing new contracts about the same, and they go up. And then this white area here would be the pre-COVID time where you've got some separation. You've got more listings. You're building inventory during that time, heading into the spring. We didn't have that here. So we got to this point in time, and we were still putting them under contract as fast as we were getting them listed. They both dropped, and the buyers seem to be more motivated than the sellers. So we don't have our listings quite to where they were, but we've got those listings being scooped up as soon as they get out there. So that's the big story here. And I talked about price reductions. That's this green line. So we continue to increase the price reductions, and that could be a function of folks looking at sales. So if you're looking at closed sales and say, wow, sales are down, maybe it's time to reduce the price because we don't want to miss this, and not looking at what's going under contract. So it's a little bit harder to find this information. You can find sales pretty readily. So if you look at this and you say we should be up in the 175 a week or so range, and we're only in the 130 range, so maybe let's reduce the price. I would argue that that's not necessary given this gray line right here. So that's it for the week. We'll see you next week.